Welcome to Market Week in Review for the week ending May 17th, 2019. I'm Sophie Antal-Gibert, and I'm joined today by our quantitative investment strategist, Abraham Robeson. Good morning, Abraham.
Morning, Sophie.
It's a pleasure to see you. I'm hoping that we might be able to pick your brain a little bit this morning. There's been a few developments this week, in particular around sort of the U.S. trade talks and implications for markets. Second, what might those trade talks and sort of the market reaction to that, what might be the impact for the Fed on the one hand, and third, what might be the impact for the Chinese government and decisions around stimulus. Sound good?
Yep.
All right.
Great.
So maybe let's start at the top. What drove markets this week? What is the latest update on the Chinese and U.S. trade talks?
So yeah, the biggest market mover this week was the Chinese and U.S. trade talks. And there was a big dip on Monday, and we saw some volatility, but really the U.S. S&P 500 ended up in about the same place as it started. The MSCI Emerging Market Index, that's down about 3% or so. So mainly volatility and a little bit of uncertainty and a temporary hit to inflation. So you saw companies like Walmart say that because of these tariffs that they would increase prices, and that'll be passed along to the consumer and potentially impact consumer spending. But the main source of worry is around the uncertainty that it's created and a potential, let's say, lack of investment that could be created. Companies like Huawei, which is a big Chinese tech giant, that could potentially be blocked entirely from importing, and that's a major sticking point. And things like that create a lot of uncertainty around how companies might spend their capital. We already have CEO confidence at low levels, and if we see any reduction in CapEx spending due to that, that could be a little more worrying.
So I agree with you that some of those things seem like, things that we want to watch, sort of watch points. Are there any bright spots that you identified this week?
One of the bright spots is that on Saturday, there was an imposing deadline for auto tariffs for Japan and Europe. However, those auto tariffs have been put on suspension. So durable goods won't be as affected next week. There could still be some hit to them, but it won't be as bad, definitely. But it does create some lingering uncertainty.
So if we put ourselves into the shoes of the Fed now, what do you think they're thinking if we were going to read the Fed tea leaves? They're looking at what just happened this week with sort of trade talks and stuff. Are they maybe thinking we're going to take some action, or we're going to continue to sort of observe and wait and sort of sit on the sidelines a little bit? Yeah,
so the Fed would probably reduce rates if the economy stalled materially. However, that's not our view. The market implied probability is about 75% that they'll cut about a quarter of a point. And like I said, that's not our view because macroeconomic news has actually been quite good. We saw that there was the Empire State Survey, which is a manufacturing survey, that looked positive. We saw that the Philly Fed Survey, which is a measure of business confidence, or at least it's a proxy for that with its forward-looking expectations piece, and that came in quite strong. And the reason that these are important is that they came out around the trade talks and slightly afterward. And so that gives you a sense of that companies are actually fine and that the trade talks haven't really derailed any of these indicators. And so those look okay for now, and we'll keep monitoring as we move forward.
So if the Fed is, by your estimation, unlikely to move, what about in China? Do the trade talks potentially have implications for how they might be thinking about stimulus, increasing, decreasing, staying steady? So
their macroeconomic news was decent. We saw industrial production be a little bit lower than expected, but okay. However, that was before any of the trade escalation. And so given that as a backdrop, there could be a potential for stimulus, because if you get decent numbers but the trade talks stall, for instance on Huawei being blocked, that could derail things, and they could see a place to induce stimulus. And if there is stimulus, then that would really stabilize economic growth and be good for equities.
Excellent. Well, Abraham, that's all we have time for today, but thank you very much for your insights. We really appreciate it.
Oh, thanks, Sophie.
And thank you for joining us. We'll see you again soon.
Hi, I'm Rob Cittadini from Russell Investments. If you like this video and want to see more like it, please subscribe to our YouTube channel.